I believe that crypto will be the 12th sector of the S&P in some period of time because it provides productivity to all 11 other sectors. This is never going away. It's going to stay forever. So how do you participate? You can buy some Bitcoin, just like you can buy gold, buy it in an ETF or actually own it yourself. You can buy the exchanges. So there's a lot of ways to participate, but yes, I'm here to stay. But I've grown up. I was around during the period where the crypto cowboys lived. Hundreds of thousands of dollars a week. I mean, I don't care how rich you are. You don't want to be stupid. One of my rules is never outspend yourself on any 30 or 60-day cycle, ever. Just ever. I don't have any debt. People that tell me, oh, I can beat the S&P, I can pick stocks, they're so full of crap. Not over the long period they can. So it's better, you might as well just own ETF. The price doesn't, it's no speculation on it. It's backed by the US dollar. If you're making $70,000 a year and you put 15% aside from when you're 25, you'll have over $1.5 million if you just invested it. Wouldn't you like to know how much money you're burning? Let's just do a gut check. You're losing millions of dollars a quarter. Like, why? Why?
Over the past year, momentum behind crypto has exploded, with Wall Street giants such as BlackRock, Fidelity, and Franklin Templeton launching and managing spot Bitcoin ETFs approved by the SEC. These ETFs have already pulled in billions, marking one of the strongest institutional endorsements the asset class has ever seen. Shark Tank investor and OLeary Ventures chairman Kevin OLeary believes crypto is on its way to becoming the 12th sector of the S&P 500 because of how much it's starting to influence finance, tech, and data infrastructure. Bitcoin in particular is leading that momentum. It's now more accessible than ever through regulated ETFs, institutional-grade custody, or direct self-custody. As adoption accelerates and infrastructure continues to mature, OLeary sees digital assets becoming a core part of global capital allocation. And with that level of demand building, he believes the price of Bitcoin is set to skyrocket. Make sure to stick around until the end of the video, as Kevin OLeary explains why waiting on crypto could cost you, and why getting in early could make all the difference.
So, are you still bullish on crypto as an investment?
I am actually, but people get crypto confused with its real potential. Let's talk about digital payment systems, the Genius Act, which is actually the Stablecoin Act. I actually worked on that bill 2 years ago. It's really nothing to do with speculating on crypto. It's a new form of payment. So it's a digital payment system. The price doesn't, it's no speculation on it. It's backed by the US dollar, treasury bills. So it's sort of a new form of digital payment. That's different than Bitcoin, which is a speculation. If you believe in Bitcoin, you think it's a digital gold and you live through the volatility. I believe in both. I believe that crypto will be the 12th sector of the S&P in some period of time because it provides productivity to all 11 other sectors. So the way I own it is I own the exchanges. My exchange, in one called WonderFi up in Canada, just got acquired last week or 2 weeks ago by Robinhood. I'm happy because I think Vlad, who runs Robinhood's great. And now he's got 1 million plus accounts in Canada, a market that he'd never participated in. But the point is, this is never going away. It's going to stay forever. So how do you participate? You can buy some Bitcoin, just like you can buy gold, buy it in an ETF or actually own it yourself. You can buy the exchanges. You can use, you can buy Circle stock now, it's public. Circle makes USDC. You can buy USDC in an account and make 4.1% interest on it right now. So there's a lot of ways to participate, but yes, I'm here to stay. But I've grown up. I was around during the period where the crypto cowboys lived, and I survived that all. And I even testified in front of the Senate and the House and whatever else the testimonies were during the tumultuous period.
Your portfolio in terms of Bitcoin allocation or crypto allocation, what is it now?
It's at about all in. We marked to market last month. It was 19.1%.
19.1%.
Yeah, I have to keep it under 20. It's a sector. So, but remember, in that is the cryptos itself, Bitcoin, the USDC, and the shares of the infrastructure companies like Circle and everything else. I've got, it was a very successful IPO. I'm very happy with that portfolio. But if everybody that's listening to this does that, they will maintain and grow their wealth. But people bet, they make big bets. They think they're so damn right. They put half their net worth into one sector or one stock and they get wiped out. That's what happens.
So would your mother pick the stocks herself, or would she invest in an index fund, or
She indexed.
she used it? So, okay.
Even back then, they didn't have ETFs, but they had mutual funds that said the only stock in this mutual fund it doesn't have any debt and it pays dividends, whatever. They were very rudimentary back then. They were just collections of stocks. I think she had like 28 names or something like that in the portfolio. But if you looked at them, they were really boring large cap names, but they were sectorally diverse. There wasn't 10 sectors back then. There wasn't 11, there was 10. So they didn't have real estate as a sector. So, but I looked at it saying, wow, these are really boring.
You learned a lot about money from your early upbringing, right? From that early context.
Yeah, because what she said to me was, look, I even do this today with wealthy people. Call me up all the time and say, look, they get divorced. This very wealthy woman got divorced recently, and she said, look, I'm divorcing, and she was a billionaire. She was divorcing. She was more multi-billionaire. And so she said, look, I'm getting everybody's calling me up to be my advisor because I'm separating from my husband. It's all his guys that did all the management of our family wealth. Would you be my advisor? I said, no, I don't do that. But I can just give you some basic advice, and you can hire people that stick on the mandate. And I gave her Georgette's strategy, but I had her do something else too. I said, let's get a piece of paper. You're a billionaire. Let's put everything on this piece of paper on the last 90 days that you've spent on, whatever the hell it is, I don't care. And let's put on, no computer, no spreadsheet, on this, let's look at all the income that you've made off your portfolio as it stands now, whether it's gold you have or land or stocks or bonds. Let's just do a gut check on, do you outspend yourself? She said, why would I give a shit? I said, wouldn't you like to know how much money you're burning living your lifestyle the way you live it? Just out of interest. Maybe you have enough for the rest of your life, but maybe you want to give some of it to your family one day or give it to charity. Wouldn't you like to know? Because one of my rules is never outspend yourself on any 30 or 60-day cycle, ever. Just ever. I don't have any debt. So I'm very careful about that. And we went through this little thing. She freaked out. She was pissing away money, just bleeding hundreds of thousands of dollars a week. Like you've had nobody restrict what you do with your money, because you're going to have to sell stocks at some point or sell gold or sell land to keep this up. And are you really that happy?
Kevin OLeary is all in on crypto, with 19.1% of his portfolio currently allocated to it. In his view, crypto should be treated just like any other sector. Size it properly, diversify within it, and avoid going overboard. You don't need to make extreme bets to benefit from the upside. Most people lose money because they overcommit to one idea, thinking they're right, and end up getting wiped out. Just look at the dot-com bubble. In the late 1990s, investors piled into internet stocks with no revenue, no profits, and no real business models, convinced they were buying the future. Many put their entire portfolios into a handful of tech names. When the bubble burst in 2000, the Nasdaq fell nearly 80%, and countless investors were wiped out. Those who stayed diversified and avoided going all in on hype had a far easier path to recovery. OLeary's approach is to stay invested, stay diversified, and treat crypto as a serious long-term investment, not a moonshot.
If you only put aside 15%, if you're making $70,000 a year and you put 15% aside from when you're 25, you'll have over $1.5 million if you just invested it in the stock index, in the S&P 500. That's what history has told you.
In what time frame?
Your whole career. I mean, you're going to be 65. You're 25, 65. You just stick with that protocol, and you'll watch it grow. You'll watch it grow. You go up and down as the market goes up and down. Some years it'll go flat, whatever. But it's the people that don't even think ahead and find themselves at 45 mired in debt, including a mortgage. You want to get rid of your mortgage in your 40s.
Most people's primary investment asset is the house they buy. Is that
yes,
smart?
it is, but it's also the debt they own. It's a primary asset. How much debt does it have on it? It's only the equity value is the asset. So if you're buying a house that's too big and you've only put down 10% and it's 90% mortgage, what do you really own? You really own the 10% at whatever price it is. sometimes housing goes flat for a while. It's okay, but it's not okay if it's too much house.
If you're a 25-year-old and you're on that 70K that you talked about, and your objective was to make money, you don't have kids, you're not in a relationship, would you buy a house?
No, I wouldn't, because why do I need a house unless I'm renting it as an income property? I'm buying a house because I'm getting married, I'm going to raise a family, I need a house. I mean,
is that the use case for buying a house, you think?
I think it is. People, but it's not, there are many people that say, I love real estate, I'm going to buy 3 houses, I'm going to rent them out. That's a different business. And I know people in their 20s that do that. In fact, they're successful. That's all they do. And so that their job is to find houses, buy them, fix them up, and rent them. And they manage that geographically tight portfolio. It happens a lot in student housing, for example. I've got a good friend who's involved in student housing. He's very successful. He just focuses on one aspect, buildings that rent to students, and he manages it. And he, raises a family, he's successful, but that's one thing he does. That's not the same as saying I'm going to buy a house because I just got married and I'm going to have a child in the next 24 months. Then you should have a house. But if you said to me, I'm single, I want to make money, I wouldn't buy a house. That's not the #1 asset class, I think. I'd get a diversified portfolio and just ride the pony with that for a while until I meet that special person I'm going to, raise a family with. And then I have a little nest egg I can work with. I mean, wealth creation comes down to one word: discipline. That's it. The ability to look at something and say, I'm not going to buy that. I'm going to keep that money working for me. Not many people have that discipline. Wealthy people have that discipline. You meet them later in life, you realize when they were young and had nothing, even the ones that were employees their whole lives that are now financially free, had the discipline to say no. There's so much stuff you don't need. The demand of an aging population is I need to eat. And so I like to own the stock for growth, but I also want to get some of the profits. And so dividend-paying stocks used to be utilities, but not so today. Every sector has dividend-paying stocks, so I prefer to own dividend-paying stocks, div payers. And then I also own fixed income products. I also own crypto now, and I own alternative assets like gold and watches. My watch collection's actually done quite well, even though there's been a correction. There's volatility, but I have some watches that have, I bought for $200,000 that are worth over $1 million today.
Kevin OLeary believes building real wealth comes down to one thing: discipline. He advises young people to focus on a diversified portfolio instead of rushing into home ownership, especially if they're not starting a family or generating income from the property. In his own strategy, OLeary includes dividend-paying stocks, fixed income, alternatives like gold, and crypto. He treats crypto as a serious long-term asset and not a gamble. For him, the path to financial freedom is actually quite simple. It's all about making smart choices, staying invested, and resisting the urge to overspend. Do you agree with his perspective? Or do you think there's a better way to build long-term wealth? Let me know how you'd approach it. Anyway, guys, before we go, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.